Be aware heading into the midday stretch on Wall Street, and the tone right now is a tug-of-war between a sizzling AI trade and a steadier, more cautious macro backdrop from the Fed. I'm Grant Mercer. This is Storm Stock Solutions, and let's bring some clarity to the chaos in this noon hour. What's really changed since the last update is how big the AI story has become globally. According to reporting from MarketWatch, the AI trade has gotten so hot that it's now spilling into currency markets in Asia. Locals are reportedly swapping their money into US dollars just to chase A-linked stocks, and that's putting artificial pressure on some Asian currencies. That's a striking sign of how concentrated and powerful this theme has become. It's no longer just about chip makers and mega-cap tech. It's starting to shape crossing border capital flows and FX move. Layered on top of that, MarketWatch highlights how Alphabet's Waymo robotaxi unit has been on a tear, with talk it could be valued near $100 billion. Add in the separate story around Amazon and a potential $10 billion deal with OpenAI, and you've got an AI ecosystem where capital keeps rushing toward perceived winners. Traders are very much treating these as areas of strength, but with the caveat that whenever a theme gets this crowded, positioning risk goes up. If sentiment turns, the unwind can be fast. On the macro side, the key anchor hasn't shifted. Fed Governor Christopher Waller is still setting the tone. As MarketWatch reported earlier, Waller expects inflation to start falling again over the next 3 to 4 months and sees room for roughly 100 basis points of rate cuts at a moderate pace. That's important. It reassures markets that the Fed is leaning toward easier policy, but it also tempers the idea of an emergent-style easing cycle. For risk assets, that's a green light with a yellow halo. Supportive but not a blank check. Energy strategy remains a secondary macro subplot. One strategist cited by MarketWatch is out saying energy stocks are the new bonds in an inflationary world, arguing income-oriented investors may favor energy over traditional fixed income. But that argument is bumping up against the reality of a very choppy oil tape this year. Professionals are debating whether that energy as bond framing really holds if commodity prices stay volatile. In terms of risks, Waller's message itself belongs on that list. It's not bearish on its face, but it does create a line in the sand. If inflation doesn't cool in that 3 to 4 month window, the market's expectations for 100 basis points of cuts suddenly look optimistic. That's why you're likely to see more sensitivity around every inflation release and every wage number from here. The macro bar has been set. There are also a couple of under-the-radar stories that traders are watching from a risk management standpoint. One is a fresh fraud case out of the credit markets. MarketWatch reports that Tricolor CEO Daniel Chu has been charged, with prosecutors alleging fraud became an integral component of the company's business strategy. Individually, that's one company, but historically, fraud headlines in credit can make investors re-examine how much risk they're taking in structured products and high-yield debt. It's the kind of thing that doesn't matter until suddenly it does. On the personal finance side, there's a very different kind of risk: family disputes and estate issues. MarketWatch has a story about a son who's been ghosted by his mother after his father died, and is now asking whether she's mishandling or even stealing the inheritance. Again, that's not a ticker driver, but it speaks to the real-world frictions around wealth transfer, wills, and aging demographics. All themes that quietly influence flows into trust services, financial planning, and income products. Looking ahead into the next hour, here's what I'll be watching. First, whether this I-driven flow into U.S. markets continues to show up in dollar strength and outperformance in I-heavy sectors. Second, how bond markets trade as investors keep digesting Waller's moderate cuts roadmap. And third, whether any secondary credit names start to wobble in the wake of that Tricolor fraud case, or if the market treats it as an isolated event. All of that will set the scene as we march toward the closing bell and tonight's wrapping up. Remember, this is information and education, not personalized financial advice. As always, I'll be here to keep clarity through the chaos of these markets. On behalf of Storm Stock Solutions, I'm Grant Mercer. Stay sharp, stay steady.